This is the FFR Trading Market Minute. Again, this is a daily candlestick chart of the SPY, the ETF for the S&P 500 that we track week to week. Now, last Thursday was the last time we did an update. It was this day right here, and I said at that time that wherever the market closed on that Thursday, whatever the low was, if that low got taken out, we should see a pullback at least to the moving average and then potentially fill the gap back here. Well, you can see the RSI had closed before the moving average, which was another condition that I said, but you can see the low was never taken out. And I said if the low wasn't taken out, chances are we'd go sideways to float higher, which we did. What we have now is we've got an outside gap down day today. Now, today's Wednesday, so I'm doing this a day early than normal. But we've got this outside gap down. The tendency is on an outside gap down day like that the market will trend lower. But it's put us in a condition where you can see on the daily chart now we've got some bearish divergence. So we've got a high in price here. We made a higher high a few days later here, but if we look at the oscillator or RSI here, it has made a lower high in price. So the oscillator is not following the price action there. That tells us that the market may be weakening up here. And you can see obviously we've had a nice big gap down day today. Now, what we want to see, the moving average, the RSI has crossed back below its moving average, right, depending on if this holds, if we close down today. And then I would say whatever the low is today, if that low gets taken out, tomorrow or Friday, right, chances are that we will come back and test this 20-period moving average, and probably best case scenario end up filling the gap way back here, right? That's the bearish scenario. If they're not able to take out whatever the low ends up being today, right, then again, I think we can continue to kind of channel sideways here for a period of time. So some divergence, some bearish divergence on the daily chart, but let's take a look at the monthly chart, because the monthly chart is starting to show signs that the market, the SPY here in this case, may be weakening up here on the bigger time frame. So again, notice we had a high in the RSI here on this day. The RSI was overbought. Market continued to move higher here, but you can see in terms of the RSI has not made a new high here. So as price is moving higher, the RSI should be following, right? But it's not. It's actually making a lower high at this point. Now we got about half the month left. We'll see how the month finishes out. It still looks to be potentially a bullish month, but this is telling us signs of weakening. If we look back here, right, the last time we saw this, we had a high in price here on this month, right? We did move higher from there, but you can see same condition where the oscillator or the RSI moved lower, and what did we get? Well, this was the crash in 2022. All right, that was about a 30% decline in the SPY, right? So I'm not saying that we're going to get a crash, but we can see that the market is weakening up here. We can anticipate a little bigger picture. Market may be pulling back. We've seen some rotation out of tech into small caps, although small caps are down as well today. So that's how things are shaping up on the SPY this week. Let's take a look at the economic data set to be released next week. Wednesday, we've got the global manufacturing PMI and global services PMI at 945. GDP on Thursday, and Friday's core PCE expenditures. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.